My dear students, welcome back to our channel. Students, in this video I am explaining Telangana Intermediate Second Year. Subject Commerce. Important questions and answers. Let's start quick revision. Part B, Theory Questions. Short questions, 5 marks. First important question is 1. What are the difference between primary and secondary market? The primary market and secondary market are two important parts of the financial market, but they work differently. 1. Primary market. The primary market is where new securities, stocks or bonds, are created and sold for the first time. This is where companies raise funds by issuing shares to the public through methods like initial public offerings, IPOs. In this market, the company directly receives money from the sale. Example, if a new company wants to raise money for expansion, it may issue new shares to the public for the first time in an IPO. Investors who buy these shares are giving money directly to the company. 2. Secondary market. The secondary market is where existing securities, stocks or bonds, are bought and sold among investors. This market doesn't involve the company, it only involves investors exchanging shares. The company does not receive any money from the transactions in this market. Example, after an IPO, if someone wants to sell the shares they bought, they do so on the secondary market, like the stock exchange. Investors buy or sell shares of a company to each other, and the company doesn't earn money from this. In short, the primary market helps companies raise funds, while the secondary market allows investors to trade securities. Next important question is 2. How the special support is extended by the government of Telangana to the SC cent entrepreneurs in our state. The government of Telangana provides special support to SC cent entrepreneurs, scheduled castes, scheduled tribes, to help them start and grow their businesses. This support is aimed at promoting economic development and providing equal opportunities for these communities. Key support measures. 1. Subsidy and financial assistance. The government offers subsidies and financial assistance to SC cent entrepreneurs to help them set up businesses. These subsidies can cover a part of the cost of starting a new business or expanding an existing one. Example, SC cent entrepreneurs can get a subsidy of up to 25 to 30% on the total cost of setting up a business. 2. Loan support. The government provides easy loans at low interest rates to SC cent entrepreneurs. These loans are offered through banks and financial institutions with a guarantee from the government. 3. Skill development programs. Telangana provides training and skill development programs to help SC cent individuals acquire the necessary skills to manage their businesses effectively. 4. Reservation in government contracts. Next important question is 3. Define insurance. Explain any 5 principles of insurance. What is insurance? Insurance is a contract in which a person or business pays regular amounts, called premiums, to an insurance company. In return, the company promises to provide financial support in case of a loss or damage, like in accidents, health issues, or property damage. 5 principles of insurance. 1. Principle of utmost good faith, aberime fide. Both the insurer and the insured must provide complete and honest information. If you hide important details, the insurance policy could become invalid. Example, if someone buys health insurance but doesn't disclose a pre-existing illness, the claim may not be honored. 2. Principle of insurable interest. The insured must have a financial interest in the subject of the insurance. Without this interest, the insurance is not valid. Example, a person can insure their house, but not their neighbor's house. 3. Principle of contribution. If you have more than one insurance policy for the same risk, you cannot claim more than the actual loss. Example, if you have two car insurance policies and your car is damaged, both insurers will share the cost based on their share. 4. Principle of subrogation. After paying for a loss, the insurer has the right to recover the amount from the party responsible for the damage. Example, if your car is damaged by someone else's fault, the insurer can claim the amount from the other driver's insurance. 5. Principle of indemnity. Insurance should restore you to the same financial position you were in before the loss. You cannot make a profit from insurance. Example, if your phone is stolen, the insurance will pay you the value of the phone, not more. These principles help ensure fairness in the insurance process. Next important question is: 4. State the features of insurance. Features of insurance. 1. Risk sharing. Insurance helps spread the financial risk among many people. When a group of people pays premiums, the risk of loss or damage is shared by all. Example, in health insurance, many people contribute small amounts, and the insurance company covers the high costs of medical treatment for those who need it. 2. Premium payment. To get insurance coverage, the insured person must pay regular payments called premiums. The amount depends on the type of insurance and coverage chosen. Example, a person pays a fixed monthly premium for life insurance, which provides financial support to their family in case of death. 3. Legal contract. Insurance is a legally binding agreement between the insurer and the insured. It specifies the terms, conditions, and coverage details. Example, if you buy car insurance, the contract will clearly mention what damage is covered and how much the insurer will pay. 4. Risk transfer. By paying the premium, you transfer the financial risk of potential losses to the insurance company. Example, if your house is damaged in a fire, your insurance company will bear the cost of repairs instead of you. 5. Compensation for loss. Insurance provides financial support to cover losses or damages. The goal is to restore you to the same position you were in before the loss. Example, if your mobile phone is stolen, your mobile insurance will pay you back the phone's value or the repair cost. These features make insurance a helpful way to manage risks and protect against financial loss. Next important question is: 5. What are the various types of retail loans? Explain. Retail loans are loans given by banks or financial institutions to individual customers for personal use. Here are some common types. 1. Personal loan. This is a loan given to individuals for personal expenses like weddings, medical emergencies, or vacations. For example, if you need money for a wedding, you can take a personal loan from a bank. 2. Home loan. This loan is taken to buy or build a house. For example, if you want to buy a home but don't have enough money, you can take a home loan from a bank. 3. Car loan. This loan helps individuals buy a car. If you wish to buy a car but can't afford the full amount, a car loan helps you by paying part of it and letting you repay the bank over time. 4. Education loan. This loan helps students pay for their education fees, especially higher studies. For example, if you want to study abroad but lack the funds, you can take an education loan. 5. Consumer durable loan. This loan is for buying products like electronics or appliances. If you want to buy a new laptop or fridge but don't have the full amount, you can take this loan. These loans help individuals meet their needs with easy repayment options. Next important question is 6. What is IRDA? Explain the powers and functions of IRDA. IRDA stands for the Insurance Regulatory and Development Authority. It is a government body in India that regulates and oversees the insurance industry to ensure fair practices and protect the interests of policyholders. Powers and functions of IRDA. 1. Licensing insurance companies. IRDA grants licenses to insurance companies, allowing them to operate in India. For example, companies like LIC and HDFC Life need IRDA's approval to sell insurance policies. 2. Regulating premiums. IRDA ensures that insurance companies set fair and reasonable premiums. It stops companies from charging excessive premiums, protecting customers from unfair practices. 3. Policyholder protection. IRDA works to protect the rights of policyholders by ensuring transparency and fair treatment. For example, if a company doesn't pay a claim properly, IRDA steps in to resolve the issue. 4. Promoting insurance. IRDA encourages people to buy insurance by promoting awareness about different types of policies, such as life or health insurance, and their benefits. 5. Monitoring and supervision. IRDA monitors the financial health of insurance companies, ensuring that they are solvent and can pay out claims when needed. In short, IRDA regulates the insurance market, making sure it operates fairly and protects the interests of the public. Next important question is 7. Explain any 5 objectives of CEC. CEC, Special Economic Zones, are areas where businesses get special benefits to encourage growth and investment. The main goals of CEC are 1. Boosting exports. CEC aim to increase exports from India. Companies in CEC are encouraged to produce goods and services for export, like textiles or electronics. For example, an IT company in an CEC might provide software services to customers abroad. 2. Attracting foreign investment. CEC offer tax breaks and other incentives to foreign companies. This helps attract investment from other countries. For example, a foreign company setting up a factory in an CEC might bring in money and technology, helping the Indian economy grow. 3. Creating jobs. CEC create employment opportunities by encouraging businesses to set up in these areas. For example, a new factory in an CEC can hire local workers, providing them with jobs and improving their standard of living. 4. Encouraging technology transfer. CEC help in bringing advanced technologies to India by attracting foreign companies that bring in their latest technology. This helps Indian industries become more competitive. 5. Developing infrastructure. CEC focus on improving infrastructure like roads, electricity, and water supply, which benefits both businesses and the local community. For example, an CEC might build better roads for easier transport of goods. In summary, CEC aim to boost exports, create jobs, attract investment, improve technology, and develop infrastructure. Next important question is 8. List the advantages of CEC. Special Economic Zones, CEC, offer several advantages that benefit both businesses and the economy. Here are the key advantages. 1. Boost to exports. CEC promote export-oriented businesses by offering tax exemptions and other benefits. For example, an electronics company in an CEC can sell products to foreign markets without heavy taxes, increasing India's export earnings. 2. Job creation. CEC help create new jobs by attracting businesses that require workers. For instance, a new textile company in an CEC would need many workers, creating job opportunities for local people. 3. Attracting foreign investment. CES provide a favorable environment for foreign companies to invest. This brings in money, advanced technology, and global expertise. For example, foreign car companies like Hyundai set up plants in CES, boosting the local economy. 4. Better infrastructure. CES offer excellent infrastructure, including good roads, electricity, and water supply, which helps businesses operate smoothly. For example, an IT company in an CES might benefit from fast internet and uninterrupted power supply. 5. Technology transfer. CES encourage foreign businesses to share their advanced technology and expertise with Indian companies. For example, a tech company might teach local workers how to use cutting-edge software or machinery. In summary, CES help improve exports, create jobs, attract investment, improve infrastructure, and bring new technology to India. Next important question is 9. Discuss the benefits of international trade. International trade refers to the exchange of goods and services between countries. It offers several important benefits. 1. Access to more products. Countries can get products that are not available locally. For example, India imports cars and electronic goods from Japan or the USA, which are not made in large quantities in India. 2. Boosting the economy. International trade helps countries earn money by exporting goods. For example, India exports textiles to the USA, earning foreign currency, which helps the economy grow. 3. Job creation. Trade helps create jobs in industries that are involved in producing goods for export. For example, in India, the textile industry exports clothes abroad, providing jobs to thousands of workers. 4. Specialization. Countries can focus on producing what they do best. For example, India is good at producing software and agricultural products, while countries like Germany specialize in machinery. This way, each country can focus on its strengths. 5. Improved relationships. Trade promotes better relations between countries, leading to peaceful cooperation. For example, trade between India and the USA strengthens their political and economic ties. In short, international trade allows countries to access more goods, grow their economy, create jobs, specialize in production, and improve global relationships. Next important question is 10. Define the staffing process and explain 4 steps involved in it. Staffing process refers to the procedure of hiring and placing the right people in the right jobs. It ensures that a company has the right number of employees with the necessary skills. Here are the 4 main steps involved. 1. Human resource planning. This is the first step, where the company determines how many employees are needed and what skills they should have. For example, a company expanding its sales might need more salespeople. 2. Recruitment. In this step, the company attracts candidates by advertising job openings. For example, a company may post job ads online or in newspapers to find candidates for available positions. 3. Selection. After receiving applications, the company selects the most suitable candidates by conducting interviews and tests. For example, an IT company might interview candidates for a software developer position and choose the best one based on their skills. 4. Placement and training. Once selected, employees are placed in suitable roles, and training is provided to help them perform their jobs well. For example, a new employee in a bank might undergo training on how to use the banking software. In summary, staffing helps a company find and train the right people for the job, ensuring smooth operations and growth. Next important question is 11. Explain the principles of directing. Directing is the process of guiding and motivating employees to achieve the organization's goals. It involves leading, communicating, and motivating the workforce. The main principles of directing are: 1. Supervision. This involves overseeing the work of employees to ensure that tasks are being done correctly. For example, a manager in a factory might supervise workers to ensure they follow safety procedures and meet production targets. 2. Motivation. Managers need to inspire employees to work hard and stay committed. For example, a manager might offer rewards or recognition to workers who perform well, motivating others to improve their performance. 3. Leadership. A leader guides and influences the team to work towards common goals. For example, a team leader in a call center may guide their team on handling customer calls efficiently, providing clear instructions and support. 4. Communication. Effective communication is essential for directing. Information should be shared clearly and regularly. For example, a manager might send weekly emails to the team about new tasks, deadlines, and expectations. 5. Coordination. This ensures that all activities within the organization are working together towards the goal. For example, the production and sales teams must coordinate to ensure products are ready for delivery on time. In summary, directing involves supervision, motivation, leadership, communication, and coordination to achieve business goals. Next important question is: 12. What do you mean by bulls and bears? Bulls and bears are terms used to describe the mood of the stock market and how prices are moving. 1. Bulls. When the market is doing well and stock prices are rising, it is called a bull market. Bulls represent optimism and confidence. Investors are hopeful that the market will continue to grow, so they buy more stocks. For example, if a company like Infosys is growing, people believe its stock price will go up, so more people buy shares, pushing the price higher. 2. Bears. When the market is not doing well and stock prices are falling, it is called a bear market. Bears represent pessimism and fear. Investors believe the market will decline further, so they sell off their stocks. For example, if the economy is in a slowdown, people may sell their stocks, leading to a drop in prices. Example: in 2020, during the COVID-19 pandemic, stock prices of many companies fell sharply, making it a bear market. In 2021, as the economy recovered, many stocks rose, creating a bull market. In short, bulls are for rising markets, while bears are for falling markets. Next important question is: 13. What are the special provisions enacted by the Telangana state for the MSMEs? Telangana has introduced several special provisions to support and promote micro, small, and medium enterprises, MSMEs, in the state. These provisions help MSMEs grow, become competitive, and create more job opportunities. Some key provisions include: 1. Subsidies and financial support. Telangana offers subsidies for MSMEs to encourage them to set up and grow. For example, the state may provide financial assistance for purchasing machinery or equipment, making it easier for small businesses to invest and expand. 2. Interest subsidy. The state provides an interest subsidy on loans taken by MSMEs. This means the government helps reduce the interest rate that MSMEs have to pay on loans, making borrowing cheaper and more affordable. 3. Skill development. Telangana focuses on improving the skills of workers in MSMEs. Training programs are organized to help workers learn new techniques or improve their skills. This helps improve productivity and quality in MSMEs. 4. Single window clearance. The state has a single window clearance system that simplifies the process for MSMEs to get all necessary approvals and licenses, saving time and reducing red tape. 5. Market access. Telangana helps MSMEs by promoting their products in domestic and international markets, offering platforms for exhibitions and trade fairs. In short, these provisions help MSMEs grow by offering financial support, skills development, easy processes, and market opportunities. Part F. Theory questions and accounting problems, 5 marks. First important question is 1. Differences between consignment and sale. Differences between consignment and sale. 1. Nature of transaction. Consignment. In consignment, goods are sent by the consignor, owner, to the consignee, agent, for sale. The consignee does not own the goods but sells them on behalf of the consignor. Example, a clothing manufacturer sends clothes to a retailer to sell, but the retailer doesn't own the clothes until they are sold. Sale. In a sale, the ownership of goods is transferred immediately from the seller to the buyer, and the seller receives payment at the time of the transaction. Example, you buy a mobile phone from a shop, ownership transfers to you immediately. 2. Risk. Consignment. The consignor retains the risk of unsold goods, as the consignee only sells them on behalf of the consignor. Sale. The buyer assumes the risk of the goods once they are purchased. 3. Profit sharing. Consignment. The consignee earns a commission or a fixed percentage of the sale price, and the rest is paid to the consignor. Sale. The seller earns the full sale price without sharing profits. 4. Payment. Consignment. Payment is made by the consignee to the consignor only after selling the goods. Sale. Payment is made immediately upon the exchange of goods. Next important question is 2. Write the differences between receipts and payments account and income and expenditure account. Differences between receipts and payments account and income and expenditure account. 1. Purpose. Receipts and payments account. It is a summary of all cash transactions, receipts and payments during a specific period, including capital and revenue transactions. Example, a sports club records money received from members, subscriptions, and expenses like rent, equipment purchase. Income and expenditure account. It shows the surplus or deficit by recording only revenue transactions, income and expenses, for the period. Capital transactions are excluded. Example, a charity records income from donations and expenses like salaries or utilities. 2. Nature of transactions. Receipts and payments account. It includes both capital and revenue receipts and payments. Example, receipt of a donation for the building fund or payment for equipment purchase. Income and expenditure account. It includes only revenue items, i.e., regular income, subscriptions, donations, and regular expenses, salaries, rent. 3. Timing. Receipts and payments account. It records transactions when cash is actually received or paid. Income and expenditure account. It records transactions when they are due, regardless of whether cash is received or paid. 4. Balance. Receipts and payments account shows the closing balance of cash or bank. Income and expenditure account shows surplus, income expenses, or deficit expenses income. In short, receipts and payments records all cash transactions, while income and expenditure shows the performance of a business, excluding capital transactions. Next important question is 3. Explain any 5 features of computerized accounting. V.V.IMP. 5 features of computerized accounting. 1. Accuracy. Computerized accounting ensures high accuracy because calculations are automated. It reduces human errors that can occur while doing manual calculations. For example, when calculating GST or tax, the system automatically applies the correct formula. 2. Speed. Computers process data much faster than humans. This allows businesses to generate reports, invoices, and financial statements quickly. For instance, a small business can generate profit and loss reports in minutes, saving a lot of time compared to manual work. 3. Data storage and retrieval. With computerized accounting, large amounts of financial data can be stored easily in a digital format. Information can be retrieved quickly using search options, making it easier to find specific records. For example, finding a transaction from months ago is simple with just a few clicks. 4. Security. Computerized systems offer better security for financial data. Passwords, encryption, and user access controls help protect sensitive information from unauthorized access. For example, only authorized personnel can access specific financial records. 5. Reporting and analysis. Computerized accounting systems can generate a variety of reports like balance sheets, profit and loss statements, and cash flow statements with just a click. These reports help businesses analyze their financial health and make informed decisions. In short, computerized accounting improves efficiency, accuracy, and security, making financial management much easier and faster. Next important question is: 4. Write any 5 advantages of computerized accounting. 5 advantages of computerized accounting. 1. Time saving. Computerized accounting saves a lot of time as it automates many tasks like data entry, calculations, and report generation. For example, instead of manually calculating taxes, the system does it automatically, reducing the time spent on these tasks. 2. Accuracy. Computerized systems ensure high accuracy in financial calculations. There is less chance of errors like miscalculating totals or wrong tax calculations. For instance, if a business makes a sale, the system automatically calculates the tax, reducing the risk of mistakes. 3. Easy data management. With computerized accounting, all records are stored digitally, making it easy to manage and organize data. You can easily retrieve past transactions or financial reports with a simple search. For example, if you need a record of all sales for a particular month, you can access it instantly. 4. Real-time financial information. Computerized accounting provides up-to-date financial information, helping businesses make quick decisions. For example, if you want to check the cash flow of your business on the spot, you can access this information immediately. 5. Security. Computerized accounting systems offer better security for financial data. They allow you to set user roles and passwords to restrict access. For example, only authorized employees can access sensitive financial data, ensuring that your business's information is protected from unauthorized users. In conclusion, computerized accounting makes managing finances easier, faster, and more secure. I hope you understand easily each question. All the best, students, for your upcoming exam. For other subject quick revision. Important questions, previous question papers, and syllabus. Links are available in description. Check out once. Thank you for watching. Like and share this video with your friends.